The following is a presentation of TFNN. Live at TFNN, the Money Masters. And now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. I am Steve Rhodes, co-host of the Money Masters. Tom is still, he'll be back in the office probably about noontime on his way back from California. And so I am fortunate enough I get to be with you here really for the next 2 hours as well, because I'll be back doing the Trader's Edge show. So thanks so much for being here with me. You've got the Dow up 36 points, the S&P's up 4. You got the composite up 2. Small caps down a point. NDX 100 up 4. Let's see. You got, as we take a look around, you got Apple now just up 60 cents. Google down $1. You got King Dollar. Where's King Dollar? King Dollar down 31 ticks. Gold contract up 4. And, you know, folks, we don't have the video camera here set up, but you can watch us on Tiger TV. And I absolutely I want you to do that. I want you to go over to Tiger TV right now and watch, because you're going to be able to show, I'm going to be able to show you a chart, and I'm going to take you through a process here, a thought process. You get an idea of the types of things that I do for my clients, so that they can get a feel for really what's going on in the markets, how we're going to go ahead and trade these things. And so I'm going to go ahead and do that, one of those elements right now. So what I've got up on my screen here is I've got the S&P 500 on a daily chart. Now, I trade a number of different patterns. You know, I trade Gartley's, butterflies, absolutely. I trade as we come into swing points, so I'm looking at volumes. I also love Japanese candlestick formations. Those of you who've been watching my shows, you know I love wearing my Japan shirt, love trading the yen dollar currency pair, and I actually love it over in Japan. Wouldn't want to live there, but man, is it a great place to visit and have a good time. Now, that being besides the point, Japanese candlestick charting has been around for thousands of years, folks. And so they're great tools. In fact, you know, rice used to be currency. Before dollars, before coins were out there. And rice was really the currency of trade back in the 16th century. And so what we're looking at here, and I touched on this this morning, when we're taking a look at the Dow. So let's take a look at the S&P, because the S&P is a better index to take a look at. You got 500 stocks, not 30 stocks, you know, that you would have to be able to push around. So what do we have in this S&P chart? Number of things. Number one, if you were listening to the show, you remember that I had pointed out that what we were forming here from about the October 21st time frame all the way up until the November 16th time frame, what we were creating here was this little triangle wedge, if you will. A flag, a pennant, if you will, if you were to be able to visualize and take a look at it on the screen. And those patterns, what they do is they will typically end up moving in the direction that the market was moving. So they're continuation patterns. That word just kind of slipped away from my mind there for a moment. So thanks for coming back into my mind. So it's a continuation pattern. And what you can see is, you know, coming off the October 4th low area here, and this candle right here, it's an important candle. It's called a piercing. It's called a piercing candle, and that's where, you know, from the prior session, and it pierces into a majority of the bottom of the prior day. It's kind of like a kin to the bullish engulfing in this case. So it was strength that we had coming in there. You can see the direction of the market was to the upside. Where did it stop? It stopped on the 17 planetary index date, October 27th. The actual date came in on the 26th. Those dates, because there are so few of them around, I believe this is number 20 out of 35, going back to 1800, if you will. You know, I like to go back and do my research, folks, in depth, because you need to understand where you're coming from in order to understand where you're going to. Now, so it stopped where it really was supposed to stop. And, folks, that's a real critical high, that October 27th. You want to be able to mark that in your books. Now, because this is a continuation pattern, and where it resolved itself was to the downside, I don't care whether it was Greece, a fire that was going on, whether it was Italy. It really doesn't matter. You don't even need to know any of that stuff. What you need to know is it resolved itself to the downside. So when you have a continuation pattern that resolves itself to the downside, that's sending out a huge signal to you. I mean, you're talking about buyer beware, caveat emptor, absolutely all over the place, and obviously the market, pulled back. Now, what you did up here at the top, and I covered this earlier, this is a 3-day candle pattern, and this is called an evening star formation. This is a reversal pattern. It's a 3 rivers because it's a 3 candle. It was named after a Japanese general back in the 1600s that helped to unify Japan. Nobunaga Oda is the guy's name. And in this case here, you've got a reversal pattern. When you've got a 17P index, you've got everything. And also, you've got a 0.618 retracement, I believe, if we go back to the highs out there. So you got everything, right? So we come down here, and what do we do between Wednesday, Friday, and yesterday? Well, what you created was the exact opposite candle formation. You created a morning star formation here. Not only did you do that, but what you have right here, this candle from yesterday, it engulfed the body of not just Friday's activity, folks. It engulfed the activity from Wednesday when we had that big down move. So you've got a bullish engulf in here that has engulfed 2 candles, almost engulfed the third. No, it did. Let me see here. Where's the open on November 22nd? Let's take a look at that. Because actually, folks, I had problems with my system last night, so I didn't get a chance to even I pointed out one of the formations that we're looking at, but not this bullish engulfing. So let's take a look. It opened at 1192.98. Where did we close yesterday? We closed at 1192.55. Okay, so we didn't totally. So you engulfed 2 candles, almost engulfed a third. That's telling you yesterday's move, even though forget the volume aspect of it, just simply from a Japanese candlestick formation pattern, it's strong. So now we've got a strong candle formation at the top, a strong candle formation at the bottom. We can see how this one resolved itself to the downside. Now, if we take a look at this being a, if we take a look at what it is that we've got going on right now, you can see we've got another triangle pattern, a longer triangle pattern that is setting itself up here. And, just like we had in this one that went from the August, let's see here, the October 20th time frame all the way to the November 17th time frame. So what did that last? That lasted for, what, a month? You don't think that, this could absolutely last a month that we're taking a look at here. So what do I think? How would you trade this? Now, just for the heck of it, let's just go take a look. What will be the retracement, in essence, from approximately the highs down to the bottoms that we made here on Friday. And we take a look at it. And where would the 618? Because, when you come to visit us, we want you to come to floor 618. That's where we're at tfnn.com. And the 618 would take you into that 1238 range. And 1238, guess what 1238 would do? It would likely run right into the top of this little, formation that it is that we've got here. So what does that say? That says that, regardless what the candles, what the charts are telling us, this is telling us that the market absolutely wants to bounce to that 0.618 area. So, I want to be able to show you this because it's important for you to be able to put these tools into your trading. If you don't have these tools into your trading, then what you want to do is, just go try my service out for 30 days, folks, because, I'm making money for all kinds of clients of mine. I might as well make you some money, but more important than that, let me educate you. Certainly I provide education on the show here, but let me provide you with education that has some rewards, that has some returns. And the reason why you want to do that, folks, is because the reality is, like I say, I like to go back, hundreds of years to take a look at data. I like to go back. If yesterday you were listening to the show, I went back and took a look at the Thanksgiving from the 1933 area where we were talking about, how our Thanksgiving was the second worst one since back then. And the reality was they were down 8%. We were only down 4%. And just to put things in perspective, when I take a look at I use these Japanese candlesticks because those go back to the 16th century, folks, and they work back then. Yesterday we were taking a look at back in the, we were looking at the charts on the during the Depression from 1929. And we were taking a look at the sacred geometry and how well it worked back then. It works now. It's going to work in the future. You want to be able to get your head wrapped around this stuff because what you really want to do is you want to understand that we are not in a bull market right now. We are in the worst bear market that anyone has experienced. I can show you that. I can prove that to you. I can show you the channels. I can show you that this is not the way that I want things to work, folks. This is just simply the way that the markets go up and down. How do I know that? Because over the last 131 years, folks, 61% of that time was spent in a recession. That means only 39% of the last 130 years have been boom time. And that means the economy is going to change. It's going to always continue to change. It means history is going to repeat itself. It means if you could find a way to thrive in any economic time, that's really what I want you to wrap your head around. That I want you to understand, and I want you to have the vision that you can thrive in any economic time. And the way to do that is to take ownership and to make your money work for yourself. And if some of this stuff seems maybe a little bit over your head or what have you, well, that's what coaching, that's what mentoring is all about. That's what we're all about here at TFNN. Look, TFNN's been around for 15 years. You know, Tom started this station 15 years ago, and with the mission that we're carrying out today, even today, we're working on new technology to be able to bring to you, you know, better screens, better Tiger TV on your portable devices that have got internet connection. You know, so you're going to be able to watch our shows live, see great visuals. It's like high def, if you will, compared to what it is that we're putting out now with regard to our charts, with regard to the visuals, if you will. And all that's going to be available on your iPods, your iPads, and so forth. And so what I want you to do is I want you to wrap your head around that you can thrive in any economic time that exists. Not only can you do that, folks, that I want you to be able to find a way to achieve. I want you to be fulfilled. I want you to live a life of meaning. And folks, if you could do those things, wouldn't you want to know how? Wouldn't you want to know the answer? That's what I've done. The last quarter of a century, folks, the last quarter of a century, I've spent my life living. You know, I walk the walk, I talk the walk. This is the stuff that I've done, and it was all based around understanding the secrets of human growth. That's really what it's been all about. Why did I want to understand the secrets of human growth? Because those are the systems that are used by the millionaires, the billionaires, the captains of industry. They're the ones, you know, I would say leaders of nations. Of course, these days, you know, I'm going to leave those folks out. But certainly the millionaires, billionaires, captains of industry, and the most successful athletes on the planet. And if you want, you know, to wake up with passion every day, doing these shows, you know, is all about me just simply fulfilling my passion in life. And no matter what it is that you do, I want you to wake up with passion every day. And if you want to enjoy the journey, if you want to attain financial freedom, folks, what you want to do is you want to get a strategy. Make sure you've got a strategy. That is 80% of success. And make sure that that strategy allows you to thrive in financial difficult times. Don't get glued to one position or another in these markets. These markets are going to go up and down. What you want to do is you want to understand money management. You want to understand how it is that you can take advantage of this. You want to invest in yourself, but more so, quite frankly, let me invest in you. I want to invest in you. I'm willing to do all the work for you to help you make money. All you got to do is take a little action. Go over to the homepage of TFNN.com. Click on my name. Go ahead, follow the instructions, sign up for the newsletter for the next 30 days, folks. It's unconditional. Like everything I give to you is unconditional. When we get back, we'll go take a look at these markets. Dow up 88, S&P up 9. Love being here with you. Be back in just a few, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Directions Alternative Strategy Funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds, I'm with X. To learn more about Directions Alternative Strategy Funds, please visit TFNN.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. I'm your co-host, Steve Rhodes. Tom is out for the morning. He will be back to be able to do his shows from 4 to 6 tonight. And right now you got the Dow up 92, S&P's up 11, got the composite up 13, you got the King Dollar is down 33 ticks. Let's go to Marvin in Orlando. Marvin, thanks so much for holding. Thanks so much for calling.
Thank you.
How are you today?
Just fine.
Oh, that's great. And you are looking at Ford.
Yep.
Tell me what you're thinking. Are you in it? Looking to get in it? Give me a little help here.
Just looking to get in it. I have a trigger. Anytime it gets down to the 10, I become interested in it for someone.
Okay. So you've traded it before when it's gotten into the $10 range, or?
Yes. Yes.
Okay. So a number of different things. Are you following me on Tiger TV, or?
Yes, I'm following you now.
Okay, perfect. So let's just take a look. Let's go ahead and rip Ford apart here for the next 4 minutes in a real good way. So what Ford did, folks, and if you just simply take a look at coming off of the top here that we're looking at, we're on a daily chart, October 24th. The high out there was 1265. That's the A point. It's B point, and it gaps down to the November 1st day. It makes a low of 1103. It gaps down with 108 million. Does a small retracement, a 0.382 retracement. That usually says you're going to do more than a 1-to-1, A to B equals CD down. And in this case here, what Ford actually did, let me see if I can pull that up here. It does almost a 1 to 1.272 A to B equals CD down. And what it made was there was a 0.786 retracement that came in at 962. So what it did was it set up a Gartley buy. Now, what was really cool about this, Marvin, is that you were making a Gartley buy pattern coming down, even though it gapped down, okay, and we have to pay attention to that gap, when it gapped down. But what it was coming into was really coming into some pretty good support. Why do I say that? Well, I say that because of the Japanese candlesticks that are out there. So let's take a look at the ones that we have. Number one, when you came off of the lows on Ford, what you did was you did a nice bullish engulfing pattern. And this here, like we were talking about the S&Ps, folks, just so you kind of put this in perspective, it engulfed the prior two sessions, almost engulfed the full third session. That is a powerful candle. When you can take a look at a bullish engulfing and engulf more than one candle, in fact, the more candles that you engulf, that tells you the type of strength that you've got in there. What else do we have out there? You had a bullish engulfing candle on September 23rd. You can only have a bullish engulfing candle, folks, when the market is clearly moving down. Okay, so it has to move down. You can't do it while a market is moving up or what have you. Well, if you go back and take a look at September 23rd, that was also moving down, and that engulfed the prior candle from September 22nd. You also, because the market had been moving down, the next day you actually had a hammer candle that was out there. And so those two candles are signs of reversals. Those are typically signs of support. And when they fail, they fail. And you have to be careful. And certainly, the bullish engulfing from September 23rd only worked for 2 trading sessions. Then it pulled back, but it created this larger one. And that larger one from October 4th told you had some real nice juice in it. So it moved up, and Marvin has a trigger. We heard he's got a trigger to take a look at Ford when it moves down in that $10 range. Well, that's exactly what it did. So you had a Gartley buy that finished in that $9.62. And what it did was on Wednesday, November 25th, it created an inverted hammer candle. So you can say right now that support on this trade is going to be somewhere below $9.75. So you've got a Gartley buy pattern, and what we should see Ford do from this point here, you should see Ford bounce up to at least the 0.382 area. Well, that would be $10.96. More likely, what you'll see with Ford, what you'll see it try to do is get into the swing point, that C point, if you will, from November the 8th. You've got 60 million shares. If you were going to go ahead and trade this, I have to go and take a look at the risk reward. I'll go ahead and pull out the position size calculator so we can do that. But what you're looking at Ford probably getting into anywhere from the 1118 to the 1168 range that is out there. Okay, so that I think is probably where it would be the first area where you'd start to have to make a decision as you got into that swing point. Because if you get in there on lighter volume and you close below it, then that says, okay, we're going to go ahead and consolidate back more down towards the bottom. Okay, so that's taking a look at it from that perspective. What I'm going to do while we're at break, we're going to be going to break in about 20 seconds or so, 15 seconds. I'm going to pull out my position size calculator, and we'll see if taking a trade on Ford right here, right now, makes any sense for you. Is that okay, Marvin?
Very good.
Okay, so folks, we'll be back in just about, I think it's about a 3 or 4 minute break. We're going to take a look at Ford. Right now, you got the Dow up 84, S&P's up 9, the composite up 11, and you want to stick around for this because we're just going to see if it makes sense from a reward to risk and what the position size ought to be if you were going to take a trade on Ford right here, right now. We'll be right back, folks.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your gold report with a free 30-day trial subscription, log on to tfnn.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. I'm your co-host, Steve Rhodes, and thanks for tuning in to us. Tom O'Brien will be back at about noontime. He'll be here for his 4 to 6 show. And right now, we are on the line with Marvin from Orlando. And you tuned in just at the right time because we're going to go ahead and set up a trade here on Ford because Marvin rides a horse. It's not the Mustang, it's Trigger. Maybe it's a Mustang named Trigger, if you will. And so he's got an itch when Ford gets into that $10 range. So we're going to go take a look at how to set this up. So right now we're taking a look at the daily chart. We can see Ford is trading out at $10.06. So what I'm going to put up here on the screen right now is my tool that I've created for all of my clients so that they can get in, make the right position size when they want to enter a trade. And the way this works, folks, it's very simple, easy to use. What you first do is you put in the symbol. In this case here, I put in F for Ford, hit search button. It comes up, tells you that you're dealing with the right trade. You then have a drop-down window, and what you want to do is choose between a stock, an index ETF, or a sub-index. A sub-index would be like the XLF. You know, you got the S&P broken down into 9 sectors. In this case here, it's a stock. And the question, you can use this to go long or short. In this case here, we're bullish, we're long. That's what we're going to do is we're going to buy it. And then you put in your trading capital. Now, for our purposes, because you might have some folks out there that want to go ahead and take this trade with you, Marvin. And so I'm going to go ahead and put in $10,000. That way, when we come up with a position size, you go ahead and you you place your trade based on your available capital in increments of this $10,000. Okay, so if you got 100 grand in free capital and we come up with a position size of 100 shares, and you would go ahead and buy 1,000 shares of this. So now, what I put in here and what usually our system defaults to is 1%, because that is the maximum risk that I want to see anybody trade on this stock. I've already done the calculation, and all you have to risk, folks, is actually less than 0.5%. And I'll come back and I'll show you why. Now, what the system automatically does is it calculates the average true range. That is the average daily noise from high to low over the last 10 days. I think that is probably one of the most important things, especially in any market. But it's one of the most important things that you can understand, because in Marvin's case, where he knows when it gets in that $10 range that he wants to enter a trade, what he wants to do, it's just like fishing. You gotta throw the line out there. You gotta give it some room, if you will. You don't want to be knocked out of a trade just simply because you thought it was going to stop at a certain price during the day. It doesn't work that way. Marvin and I, we can't control what everybody else is doing out in the marketplace. So we want to make sure that we have a stop that is outside the average true range. That is the daily noise. Now, what do I like to use as a multiplier of that? I love to use Fibonacci expansion numbers. So in our case here, we're using 1.618. So we're going to multiply, in this case here, 28 cents times 1.618. That's going to tell us our stop ought to be at least 45 cents on this trade here. Now, we're going to enter it at $10.07. As we said when we went to break, we're going to be shooting for $11.68. Once you put all that in there, and all the true range information, folks, is calculated at the bottom, you hit that calculate button, and it gives you everything that you need to know about the trade. It's F is forward. It's the stock. We're bullish. We're long. Tells us our stop multiplication factor, 1.618. Our entry price, around $10.07. Says our stop should be $9.62. We'll go back to the chart. We'll take a look and see what $9.62 was. Our per share stop, 45 cents. We're only risking 0.5% of capital on this. Says our position size should be 110. That means you either round up or round down. In this case here, I just simply round down to 100 shares per $10,000 in trading capital. Our exit price, $11.68. Our reward, what we're expecting, $1.61. We've got a reward to risk of 3.55 to 1. To me, that's a good trade. At 0.5%. We're still risking 11% of our working capital. I don't like to risk more than 10%, but, I'm not going to have a problem. That's our investment, if you will, inside the trade on Ford. So for me, this looks like a good trade. Why? Because we've got all of the right candle formation out here, all right? And we have, on a weekly basis, we've got a bullish engulfing. 962, by the way, is the 1 to 1.272 A to B equals CD down. It's below the inverted hammer. I'd probably put it a few ticks below that. Marvin, how's that for you?
Sounds good. And Steve, I did start your letter, so I'm very much enjoying it.
Oh, that's great. That is great. That is great. Thanks for the call. I appreciate it. 877-927-6648. We'll be right back, folks.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. I'm your co-host, Steve Rhodes, and thanks for joining us on the Money Masters. Tom will be back in tomorrow for sure, and he'll be back today from 4 to 6 to do his show. You want to stick around because coming at noontime, I'm with you for another hour after this. Coming up at noontime, we got Victor Jones, does absolutely a fantastic job with the Options Hour. It is commercial-free, uninterrupted, folks. And so you got to like that. And then you've got from 3 to 4, you got Ken Shreve, Breakout Investing with Ken. And he is the warm-up band for Tom today from 4 to 6. Now, right now you got the Dow is up 89 points, S&P's up 11, Composite up 12, NDX is up 12 as well, small caps up 2. The small caps are not leading the charge here on the way up. So and let's just take a quick look here at the IWM, see if there's anything that, shows itself to us right now. And on the IWM, I've got a 5-minute chart up on my screen. So we see the gap up that we had yesterday, and that gap up, the biggest volume that we had coming in there was in the 5-minute time frame was the 9:40 time frame. So 9:35 to 9:40, you had 4 million shares. And then what you did was you just simply traded sideways. You consolidated sideways yesterday all the way up into the last 5-minute trading session that took you to 6 o'clock, where you had 4.8 million shares that came in there. So, you had 4.8 million shares. You've got, on a 5-minute chart, and you've got that 9:40 time frame, 4.1 million shares. So what you've got in there, you've got some holders, in the early stages and the late stages of the game, and that, quite frankly, should be some pretty good support. Even you can see that what happened here, if you just look at it from a purely technical standpoint, the low at that 9:40 time frame was at $68.91. That was the low for the entire trading session. And when you come all the way over to the, that was 15:20, that'd be 3:20 in the afternoon, you got down to a low of 68.95, right? So you break through that area on lighter volume on 1.7 million shares. So you come down, you test a swing point, if you will, you test a high volume bar, even better, and you test that and you reject that. And when you rejected that, folks, let's just take a look and see, on the 5-minute chart out here for the IWM, first you reject that area, you close above it, and then what does it do? It takes off from there. So, there are folks that will be out there that will say, they don't necessarily understand, a 5-minute chart or why things do what they do. But the reality was when we were taking a look at that bottom, if you will, that, when I call bottom, was coming out there and testing it. That candle on the 5-minute was a hammer candle. And you really want to be able to understand, hammer candles can only be formed at the bottom. And in this case here, what we have is, you can see that was the low for the trading session. And so just if even, we had a caller earlier that was calling and had quick fingers, was taking a look at potash. That was Tom from Tampa, and that was in my first show that we did. And so if you were patient enough, if you had the right money management strategy in place, folks, you know what you were taking a look at on the small cap. So you could have been trading just simply the TNA, you know, at that stage. And we can go over and take a look at what the TNA was, but just simply on the IWM, you know, you went from that $69 area, and it closed up at $69.92, and you did that from what time period? You did that from 3:20. So you did that in a 40-minute time period. You know, you made a dollar on that when you had the reversal pattern, when you had the candle that came in there, you know, and suggested that that was a good trade. So. Folks, you want to really understand these candles that are out there. They will help you in your trading. You want to understand the money management piece of it. And I want to thank, I didn't know that Marvin was a subscriber, was a client of mine. So, you know, Marvin, I do want to thank you for calling in and taking a look at Ford. Marvin knows that we went long yesterday in another auto stock, if you will. And that's nice because that's up 1.1% today as well. And so, folks, you really want to go ahead and allow me the opportunity to help you even further, you know, with your investing, with your educational process, and that position size calculator. Even if you just tried that for 30 days, you just kept up with your own system or whoever it was that you followed, you really want to understand the importance of position sizing. And I wish I could remember exactly what the trade was that came in. The caller come in yesterday. He had made a bunch of money on Apple. And when we were taking a look at the trade that he won, he had 5,000 shares. And the proper position size for $100,000 was like 1,000 shares or something. And so, you know, the reality is, you know, if you were trading with $1 million, maybe you had the right position size. And if you weren't, you know, you were definitely over-invested. That's why on that position size calculator, why I have things identified so that it tells you when you don't need to make 1%. You can either widen your stop, and sometimes you want to do that, or you just simply need to lower the risk. And because when I talk about the strategy side of the money game, when you take a look at being able to do that, that's really what it's all about. It's really understanding that when you can get a great return, like here, you know, and Ford, there's a possibility of a 3-to-1 return. And I know that Marvin will, if he gets in that trade, he'll manage it along the way and take a look at that. Because even if you get, look, folks, I'm going to put this up on the screen just so that you can, truly understand it, because you really want to understand this about your own system. Whether it's my system or not, it really doesn't matter. It's just the point is you want to understand this about your system. The key is understanding the expectancy of your trading system, whether or not over a large series of trades that what you're trading is going to give you a positive return. If it's not giving you a positive return, trading more is only going to help you to lose more money. And you just need to know 3 factors. You need to know what your winning percentage is. You need to first make sure you use stops. Otherwise, you can't come up with a table like this. And you need to know if you use a stop, what percentage of the time are you getting stopped out at 100%? In my case here, we adjust our stops. So 28% of the time, even though we risked 100%, if you will, we've adjusted our stops and we're only risking 80 cents on the dollar. 6% of the time, we're getting jumped because we're in volatile markets. And instead of, having the 1% risk, we've lost 1.4% time. 67% of the time, the factor that we're making is 1.19%. But that gives us a positive expectancy factor of 0.48. This is the number that's important. These other numbers are just simply how you arrive. This is the journey piece of it, folks. And on the journey piece of it, in the last 5 months, 71 trades. That means if in the next 5 months we have the same expectancy, and I run between 0.31 to 0.48 in these volatile markets, at 0.48, folks, that gives you almost a 70% return. You want to understand the expectancy of your trading system because it'll allow you to take trades when you are the bull and the bear looking over the cliff. It'll allow you to take trades, folks. We'll be right back.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before December 31st from your local Barnes & Noble store. And you will be given access to not just 1, but 2 exceptional archived courses. Tiger Scaling, the Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools, as well as money management while reaching for those trading and investing profits. The Trader's Edge with Steve Rhodes, up next on TFNN.
Welcome back, folks. I'm your host, co-host, Steve Rhodes. Tom will be back this afternoon, and he will be back for his show from 4 to 6 tonight. So stick around. Thanks so much for being here with me right now. You got the Dow Dow up 69 points, S&P up 8, Composite up 5. You've got the small caps are flat after a nice big day yesterday. They're taking a little rest, if you will. King dollar is down 30 cents here. It hasn't moved that much since we have been on the air. And had a request, I think it was a request, or maybe they were just inside the den, taking a look at Tiffany's. So I went ahead and just punched up Tiffany's, if you will, the blue box company. Symbol on that is TIF. And so let's go learn from Tiffany's. Let's take a look at the chart. Let's take a little tour around here. And since we're talking about Japanese candlesticks, let's go find out on a daily chart what is out there. So what can you learn? What can you learn? What can Steve actually teach you today that you can use in your trading? Well, one of those things, we've been talking about bullish and bearish engulfing patterns. And if you take a look at the October, no surprise here, and if you take a look at October 4th here, October 4th, what you will see in Tiffany's is you had a nice bullish engulfing pattern. You know, it engulfed just one session, the prior day session, and, you know, pierced pretty well into the session prior to that. And then you can see from that point in time, you know, it had a nice move up. No real significant candles inside here other than one. I don't have it marked here on my screen. I've just seen it right now, and that is this little gap up. You had a little window right here, this little gap up, which occurred on Tiffany's between October the 20th trading session and October the 21st. Now, that gap has been filled. You know, we talk about those being, I like to think of gaps more as windows, as open windows, if you will, because eventually you're going to go ahead and close those windows, especially if you're up in Memphis today and you're getting some snow, right? Hey, even here in Orlando, or not Orlando, I mean Clearwater tonight, it's going to get cool. It's going to be in the 50s. So, you know, 50s, folks, when it gets below 70, I put on the heat. So definitely going to be closing any open windows tonight. Now, you like to see a bullish engulfing. You can only see one at the end of a down move, and it helps to set up support and resistance. In this case here, in a bullish engulfing, you know what you want to take a look at as the bottom of that candle, in this case 56.21, would be your support area. Now, at the top, you're looking for just the opposite. And when you're making highs, in this case here, what Tiffany's did, Tiffany's actually made a bearish engulfing pattern, and it did that on November 3rd. It closed out at $79. So it gave you the signal right there, you know, to be careful. In fact, what it did was it set up the new resistance area. And the resistance area was the high, which was $79 even. You can see that a couple trading sessions later, what it did was it tried to get up over that area. It didn't. It got to 78.89. That was 1.7 million shares. The day that we had the bearish engulfing was 2.5 million shares. At that stage, if you traded based on, if you were aware of Japanese candlestick patterns, folks, this would have told you that Tiffany's was in some trouble. What does Tiffany's do right now? You got Tiffany's trading out at 67.40, released earnings traded down this morning all the way to 63.98, and on its way down a few trading sessions ago, 4 trading sessions ago. That means going from the November 22nd time frame to the November 23rd time frame, you had Tiffany's, and it's got a little bit of an open gap down there as well. And it's got an open gap. Now let's take a look from a retracement standpoint. Let's go to our wonderful Fibonacci expansion, contraction, and see where we're at that wise. And you can see you're down. You know, it's testing the 0.618 area. The 618 area is $65.68. You want to see you've got huge volume in Tiffany today. We'd have to go dig down intraday and see what's going on from a pattern standpoint. But, you know, that looks to me like you'd want to wait for Tiffany to get into that swing point of October 4th. But you've got more volume coming down right now today. 877-927-6648. Heck, this segment's over. Money Masters is over, folks. Stay tuned. I'll be back with you for one more hour, and then we'll go to Victor Jones. Thanks for staying here, folks.